Good morning. De Beers is over 100 years old, and for most of its history, they have run the global diamond industry. 90% of the world's diamond trade was controlled by De Beers. The company controlled the supply side of the industry through their mining operations in Africa. De Beers also controlled the pricing of diamonds by restricting that supply and by managing a small number of large buyers across the world. De Beers was also one of the greatest marketing companies of all time. Many of us grew up seeing ads in newspapers, magazines, and on TV. The 2 months salary rule, for example, which somehow established the expected budget for engagement rings, that came from De Beers. Now the De Beers empire is collapsing. The company is looking for a buyer, but nobody wants to take it at anywhere close to the price De Beers hopes to get. And that's because there aren't any institutional buyers who can see how to get around the China problem. Demand for natural diamonds has fallen apart in China, down by half in 5 years. Chinese retailers are sending tens of millions of dollars worth of inventory back to De Beers every month. That supply coming back to the global markets is crashing prices everywhere else. Young people in China prefer diamonds that are grown in Chinese labs to the natural stones hauled out of the ground in Africa and polished by De Beers. So over $30 million per month of stones are coming back out of China and going to India and blowing up markets there. Across the world, prices for rough diamonds are down 50% in 2 years, and for finished stones, prices are down by over a third. Lab-grown diamonds are the same, chemically, as natural stones, and it's a mechanical and industrial process to make those. Once perfected, it was simply a matter of time before lab-grown diamonds became just another commodity. Boston Consulting Group says that diamond production has gone up by 10 times in 6 years. Demand and pricing for natural stones are getting wiped out. Wholesale prices for the lab-grown stones are down over 90% in that time, 5 years, and now are slightly over the cost of production. This is a perfect example of the law of one price. The diamond market is commoditized now because of lab-grown diamonds from China. Diamond prices across the world are going to fall as Chinese production rises. Diamonds are small and easy to transport, so the lower prices in China translate immediately to lower prices in India and London and New York. The United States is the largest retail market for diamonds, and over half the engagement rings sold in the US last year were grown in labs. Natural stones still enjoy a large price premium over lab-grown diamonds, but that premium is falling, just not as fast. A 1-carat stone grown in a lab is now $745, down 86% in 10 years. A natural diamond is down 40% since that time, now just under $4,000. But that shows that there is still a big market for natural stones, and buyers are still willing to pay a premium for the prestige of a natural stone. But that right there is part of the problem. The markets are ignoring this retail price premium because they don't believe that De Beers will be capturing that premium for much longer. De Beers is owned by Anglo American, and they're looking to offload the company, to sell it. But they're aggressively cutting the book value of their De Beers holding from $10 billion to $5.5 billion in just 2 years. Even the accountants at De Beers don't think that these profits are going to last.